Section 3 is posting to our general ledger. So what I have open here is my accounts receivable. This is a new account. You have not dealt with the accounts receivable for, because in the past we have done accounts receivable, Cody Dye. We've done accounts receivable, Dylan. We haven't just said Dylan or Cody before. So we have accounts receivable, which is called a controlling account. This is very important that you understand that. The value in accounts receivable equals all of my customers added up together. A business needs to know how much money they should expect from the total of all of its customers, but they also know individually what each customer owes them. Now, the same thing is going to hold true for accounts payable. There is an account called accounts payable, which is a liability. It starts with the number 2. And it is a controlling account that deals with all of the individual vendors that we owe money to. It's important we know how much we owe everyone, but I also need to know individually how much I owe each person individually. So controlling accounts will always equal the sum of all of its ledger. So we have 3 ledgers now: general, accounts receivable, and accounts payable. The accounts receivable and accounts payable put together is called your subsidiary ledger. Those are key vocabulary words that you're going to have in this chapter. Now, it's easy to identify your subsidiary ledgers because the balance columns, you don't have a debit and a credit balance column. You have either a debit or a credit, and it does not say account number. It'll either say customer number or vendor number. The other way that you can easily identify a subsidiary ledger is it only has a 3-digit account number, and as you can see here with accounts receivable, it has a 4-digit account number. The first number still clues you into its classification. 1 is assets, 2 is liabilities, 3 is stockholders' equity. Now we have a 4th account called purchases, and then we also have revenue and we have expenses. So be aware we have a 4-digit account number that rolls with it. So what we're going to do in 11.3 is we are going to move through our journals and we're going to post to our general ledger. And I'll give you a hint. When you take a look at your sales journal and your purchases journal, those totals are going to be posted to your general ledger, but individually they go to your subsidiary ledger. And when we take a look at your cash receipts and your cash payments column, you're going to post individually from the general column, and then you have to post the totals to all accounts. So you just need to be aware of, are we posting individually or are we posting totals? How often do you post totals? Once a month. Individually, the key thing that you have to watch out for this chapter is individually you have to post anytime the directions tell you to post. Because if you don't do it when it tells you, and you do it at another time, you're going to have your dates out of order and APLIA will mark them all wrong. Very important. Okay? So, let's rock and roll on these directions now that we understand what we're looking at for 11.3. So, we're going to use the partial cash payments in general journals. And the first thing we have to do is we have to start a new page for General Ledger Account Supplies Office. And we have an account number 1145. So we're going to go ahead and go to Supplies Office. The first thing that we have to realize is it does have our account title filled in and our account number, but we have to go through and put in a balance because we're carrying it forward because our other one wasn't big enough. So we're going to put in the date of October 1st. What do we put in the item column? Balance. And we only do that if we're putting in the balance. And then that means we have to put a check mark in the post reference, and we have to determine supplies office, balance debit or credit. I didn't hear anyone. How do you know? Yes, that's it exactly. It's an asset. It has a debit normal balance. So I have to go in the debit balance, and I'm going to put in the balance of $3,824. Good job, Nick. So instruction number 1, check, check, we're good. Now, instruction number 2 reads, post the October 19th general debit entry of cash payments journal to the appropriate general ledger account. So, cash payments journal, the 19th. It looks like we have a mistake in APLIA, and I want to point out why. Because what do they already have in there? They already have our post reference. So on October 19th going across, when I look here, they should have 1145 open right here so we could fill it in, but they already have it filled in. We need to post this 6960 right here to supplies office. So I'm going to go right here and put the date of the 19th. Post reference is going to be CP what? 15. And it's going to be 6960. Now, for me, I have to scroll up and down because I can't see it all. So what I would do is I would go here in Chrome and make it a little bit smaller so I don't have to scroll as much. That is a nice feature that you can do. So I put 6960 in there. Now, supplies office had a previous debit balance of $3,824. I need to add to it 6960. So I have a new balance now of $3,893.60. The last step that we should do that we can't do because there's a mistake in Applia is to take that account number 1145 and put it back up in our cash payments journal. Now what they want us to do is they want us to post right here from October 12th to the 28th. Now when I look at October 12th, all of these amounts here need to be posted. I need to post a sales returns and allowances, sales tax payable, and accounts receivable. So I'm going to start first on the top and work my way down. So I'm going to go to sales returns and allowances. Sales returns and allowances is a contra account to our sales account. Sales has a credit normal balance, so sales returns and allowance should have a debit normal balance. We keep track of what is returned to us. But the date of the 12th, my post reference is going to be G11, and I'm going to go ahead and debit that $52. I previously had a debit balance of $93, so I'm going to add to that $52. And that tells me right now, as of October 12th, customers have returned to us $955 of product to us. That's important. Last step is to put account number 4130 back up on top. Now I'm going to do exactly the same thing with sales tax payable. Now sales tax payable is a liability. Liabilities have a credit normal balance. Bless you. Source document is G11. Now, I am going to be debiting sales tax because what is happening with my transaction CM29 from my general journal is a customer returned product to us. So they return $52 worth of product, and they also don't have to pay sales tax of $312. So that is why we're going to be, bless you, going through and debiting sales tax of $3.12. So I have to then subtract from my balance of sales tax of $1,410. I'm going to subtract $312. So now my new balance as a credit is $1,098. Account number 2140 goes back up top. Did I do the math way wrong? I did the math way wrong. Minus 312. Yes, thank you for someone realizing that math was not even close. $1,406.88. How's that? Is that way better? Thank you. Aha, you are listening to me. Now we have to actually go through and post to accounts receivable David Bishop. Now this is where previously for this chapter, we have already posted to the Subsidiary Ledger account in our accounts receivable David Bishop. Now we actually have to go through and also deal with our accounts receivable. So I'm going to put the date in of the 12th. Post reference is G11 still, and I'm going to go through and credit accounts receivable $55.12. So we have a debit of $1,339.85. Subtract $55.12, 128,473. I'm slowing down to make sure I get my calculations right. Then you can do supplies office. Date of the 26th, G11. A debit of $2,544. $3,893 plus So I have a new balance in supplies office of $6,437.60. Then I'm going to go to accounts payable. Date of the 26th. Post reference is still G11. And I'm going to credit $2,544. When we take a look at posting on the 28th, that is dealing with a debit memorandum. A debit memorandum means that we return products to a customer, which is why we're going to turn around and debit accounts payable right away, because we return value of $125, so our new balance should be $4,936.80. The last step is always to take that account number, 2,110, and put that back up into our general journal. Last thing we have to post is going to be purchases, returns, and allowances. Date of the 28th, G11, credit of $125. We had a previous credit balance of $1,091.35. Going to add $125 to it. Now, purchases, returns, and allowances is a contra account to our purchases account. What this tells me when I look here is we have, as a business, as of October 28th, returned $2,026.35 to companies that we bought from. Now, that's a lot of money. So we need to think about what differences do we need to make sure that we are not continually returning products, because that's a waste of time on our part and resources. The last step that you always need to do is to take your account number, put it back up on top, and you can check your answer.